Hello and good morning everybody. Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 20th of March 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, interesting week as always. Excitement happening there. There's lots of market moves happening. We'll try and make some sense of it today if we can for you, and clear through those shark-infested waters and try and find a few trades that might be of interest for you. Okay, so today I want to talk about the trade plan trick, which is in the heading there. We'll get into that in trading tactics a bit later on, but it's an interesting area that we will follow that there. As I say, it's an illusion. It's not an illusion. Trends are a fact in this market, so that's what we're going to sort of focus on a bit today. Okay, so I want to firstly get to my trend intensity ratings. Okay, first up we've got, interestingly enough, which I'm not always big on the goals because they can be a bit volatile sometimes, but we really are getting a sweeping move at the moment in those sectors, and we've got a few there that we hold. Firstly, A2M, which is not in the gold sector, but it's doing independently very well, and you can see there on the chart there, it's broken well above the highs, above $7 there, and kicking nicely, and our stop is almost to break even there already. Its trend intensity rating is 10. It's broken out of a nice big consolidation pattern there, and buyers are piling in. Momentum's great, so it's looking terrific at the moment, A2M. Then we've got the solid of miners, Capricorn Metals, which is doing incredibly well. Evolution's doing well. Genesis Minerals is doing well. Medibank Private, not in the gold sector, but it's also bounced high and doing okay. Come back a little bit, but not too bad considering what the market's done. Proesis is doing well, gold. Regis Resources, gold. Sims Metals, another one in that sort of base metal area, and I'm looking at South 32 as well a bit later on. It's broken higher, Sims Group. We'll have a look at the chart. Looking quite interesting at the moment. Then we've got two other golds, Gold Road Resources and NSD, being well supported by a flying gold price at the moment. So that's the top 10 ratings we've got at the moment. An interesting group. Make sure you're careful with your stops on this. Can be a volatile market, so we've got some good profits in there and we've got to make sure we protect them. Okay, stock pick count. Well, down 12 this week, okay, to 36 from 184. So our stocks itself, stock picks, are down to 32 of 158 stocks covered. Narrow breadth, very bad. Breadth has been weak for a while, and why that is, we don't really know. But we've been focusing on the ones that have been going up, which is our stock picks, and they've been doing very, very nicely indeed. Then we've now got 4 ETFs of 26, so we've cut a lot of those ETFs there, which is a bit of a surprise, but there we go. That's the way it is. That's what the stock pick count looks like at the moment. Okay, then we're going to go straight into the overseas markets, okay? So the Dow, correction time it is. So we've pulled off here. The Dow's dallying around this S1 area there, hasn't broken decisively. What I don't particularly like is this huge volume at the moment we've got on the downside, and momentum has really gone out. So the sting in the tail has gone out of these up trends. They're certainly being challenged by the sellers. There's not a huge break on the Dow and the S&P yet. The Nasdaq, because it went up further, is looking a lot worse, but this is really a bit of a worry here because the selling is pushing the price down, and that's a concern to me. And there's a lot of uncertainty there, being driven by Mr. Trump. Here's Nasdaq down. It's certainly well broken down from its trend line, horizontal point, and also below the moving average there. So it's also falling on very high volume there, and momentum's really gone out of this one there. So Nasdaq, we just stand aside when these sort of things happen. Not that we trade the Nasdaq, but for those people in those tech stocks there, they certainly look like there's a bit of selling pressure happening there now. The S&P, which is a broader index, it's not looking too bad. Again, we've got a lot of heavy selling here, which is a bit of a worry here, and it's pushing the index down. So it's below the average, below the trend line, and we're just holding around this S1 area desperately at the moment. So I still think we've probably got a little bit more down to go there, although last night we had a good bounce. But really, the scheme of things really hasn't made much of a dent in this downward move that we've just seen over the last few weeks. Now we go to our market. Just having a quick look at our market. Looks like it's down quite a bit at the moment. It's come down 1, 2, 3, 4, 5 weeks down. This week hasn't finished yet. We'll probably have a bit of a rally today. Yesterday it petered out pretty badly, which is not such a good sign. But if we look at it now, the Dow's down about 7% high to low. Nasdaq's down about just over 12% high to low, the S&P 8%, and our market about 9% high to low. So we're equating to the S&P and the Dow more or less. The Nasdaq a bit weaker, which is what we would expect because it's gone up higher. But really looking at this chart here, we've broken the sequence of high highs and high lows. So we're now in a corrective phase here. How far it's going to take us down, we don't know. We just let that happen. And of course, the rug's been taken out of this index by the banks at the moment as they've all of a sudden become weak. But they have gone up a long way, and we know that CBO is very overvalued, so it could still have a very, a lot more downside yet, and the metrics would still be okay. So it really got quite overblown there, and we can see NAB, which is diving pretty badly as well. So those banks that were supporting the index is now gone. So that's the story there. Then we've got the high flyer, which is gold, which really has just been a relentless rise here. Ever since it broke up above 2,000, it's now nearly 3,000, so it's gone up 33%, which is great. We've had a nice little pattern of impulse moves, drift, impulse moves, drift, impulse moves. That's what we like to see when the market's moving higher. The uptrend is intact. The trend line is following pretty well above the moving average. The volume is very nice. Momentum is solid. Really, there's nothing to worry about at this stage. Again, gold can be a volatile one. It can turn on a sixpence sometimes. But for the moment, we're making some money in there. And that's really one of the areas we are making some money because we've cut a lot of our stocks out. The Commodities and the banks and all these ones have been chopped out at a fairly hefty profit. So we're sort of standing aside on some of those ones because potentially they could come down a lot further. And that's a bit uncomfortable for me at the moment. But our stops have gone off and they've just told us what to do. So we've neutralised those positions. Copper still remains the interesting one. It's well supported. We've got a good rally happening here, but really the volume hasn't been huge. We've got some green bars here, but nothing extraordinary. I would really like to see that expand a little bit more because we've got this huge pattern here, a huge big bullish pattern here, and it's risen pretty quickly since December. We've got momentum's good, so I guess if I was going to run a trend intensity over this, it'd probably be a 7 or 8 or maybe a 9. So apart from the volume there, it actually looks pretty good, and this is quite a big important area we're around. So if we start to break above this, that's a significant break. So it could well be, although the copper stocks really, BHP, Rio, haven't really done much as yet, and a bit of support there, but nothing that exciting, so they haven't been too excited about it, which is sort of weird. But anyway, that's just the way it is, and as stocks we trade, and stocks we follow, that's what we're looking at. So BHP or Nor Rio, we've got a couple of stocks there. I think Sandfire's got a bit of copper, and there's a few stocks there which are doing okay, but not a lot at the moment, which is sort of weird. So just keep an eye on them. Maybe they'll jump at some stage. Okay, then we've got Brent Crude, which really just the pressure's still on the downside. It's still holding above that support area down here, but it really has, still a lot of selling, which hasn't pushed it down. It's holding this area here. The momentum is slipping. It doesn't look all that good, but it's still holding, which is sort of weird. But even for the upside here, if we broke the average and broke the downtrend line here, we've still got this area here, so we could have a lengthy sideways pattern occurring here in Brent Crude. So I really can't get too excited about that or the oil stocks at the moment, and they're all doing, Woodside and Santos are all making new lows at the moment, which is not that happy for them, but there's value otherwhere, and we're looking at the golds, which is really, and some of those miners, which is really where we're finding our value at the moment. Okay, so now we can get into some stocks and have a look at them. Some interesting stocks last week we had a look at, but this week we've already looked at A2M and Prometheus, which we saw there. Actually, I haven't looked at Prometheus yet. We'll look at that in a second. But I just want to go through some of these metal stocks. Capricorn Metals. These are the rating very well. It's a top 10 rating. This one. It's had a nice little break up here to a new high here, and simply it has just rode in a sequence of high highs and high lows. And so we just raise our stop. Again, remember, once we're in the trade, the analysis gets us in, and the trade is managed by the risk management, which is our stop loss that manages our trade for us. Okay, so we've got some pretty good volume here, which has appeared here. Momentum's good. It's above the average. The weight of evidence says it's trend intensity rating of 10. All systems are go here. A new high and a new trend. So we just keep following that high, and we know where our stop is. In case it reverses. So it's still looking pretty good. Sigma Health, an interesting one. We just recently covered that one when it completed the merger, or the reverse takeover, if you like. So we did begin coverage of that this year. And it's also, so it has made a new high in late February, which we bought. and we are holding that one at the moment. It's really not performing too badly considering what the market's doing. It hasn't come back that much. I know there's quite a lot of excitement out there about Sigma, so there's probably a lot of support for it at the moment. Any pullbacks, you can see there's a long candle here, supported pretty well. So it's above the average. The volume is okay. And momentum slowed a little bit as it passes through here, but generally the trend intensity rating is 7. That's our perspective window for us. That tells us what to do, or where the signals are lying. But ultimately it's a stop which is set, which tells us what to do, whether we stay in the stock or not. But the stop, it's above the stop, and trend intensity rating is +7, so that looks okay to me. So Sigma's an interesting one, and I'd be holding that one for the moment, based on what I see there. Okay, Brambles is another one that's outside those minus thing, but is also doing pretty well. It had a good break higher back in sort of August, October last year, which we bought up here. Okay, that's where we bought it. It had a sideways move, but generally going higher there. A little bump up here back in late February. It's holding above there. Got a little bit of selling here, not making too much effect at the moment. So Brambles is holding. The momentum has slid a little bit, which really just means the acceleration has slowed, and clearly it has slowed from this bump up here, which gave the momentum a bit of a kick. It has slowed, but it's still going up. So momentum can slow, but as long as it's above the 0 level, it does mean that it's still positively. The acceleration is still positive. So that's a bullish point for Bramble. So the trend intensity rating is still in the strongly trending zone at +7. So we're hanging on to this one with our stop nicely set, for us to give us a warning if we need to get out. But for the moment, it all looks okay, Brambles. Okay, so we have a quick look at Sims. Sims Group's an interesting one. Trend reversal here, quite nice pattern. Sort of snuck under the radar a little bit here. That's where our resistance is at the moment. We've got our low point down here around $10. It rallied to about 13, came back, created a higher low. We've now got the sequence of lower lows, lower highs, broken from higher highs to higher lows to higher highs, which completes a trend reversal. As we saw this breakthrough here, we also saw some nice volume kick higher. Momentum is in a positive state, and the stock is now above the rising moving average. So all systems are pretty good there. Trend intensity rating is 10. R1's the next target. R2, $22, that's way a bit further, but still that's the high. Through R1, then that's the next step we look for. So for the moment, we're looking at R1 up around 16.50 for Sims Group. But a nice little trend reversal with a nice pattern there, supported by some very nice volume and momentum. So an interesting one there. Okay, and I did also mention South 32, not quite as far along as Sims Group, but you can see the highs back there, up around just above $5 there. That's the cycle high for the moment. The cycle low is down around $3. We've got a little double bottom of support here, which was quite good. It rode to the resistance point, didn't get through, has come back and created a higher low here. Okay, so now we're in a stage where we're looking in the middle of this switch zone at the moment. So we've got that now moving above the moving average. The downtrend line's being threatened, but really this is probably the key point here, which is the peak between the two lows. And that's really which would set off a trend reversal for us from that one there. So South 32 is looking interesting. Trend intensity rating is still 1, so it's neutral. It's moved out of that downtrending zone into the neutral zone, which is where we like it. And a trend reversal above that at that $4 level would certainly kick that trend intensity rating into positive territory. So that's what we're looking at South 32, not yet, but it may well follow Sims higher and create a trend reversal, which would be a nice move. And the first resistance is up around this 530 level, something like that. Okay, so some of those metals ones are looking interesting for us again. And one we have followed here, which I really like, which is Regis Resources, which is really now, we had the break up there, it dallied about a little bit, it sort of slowed down, but the volume sort of picked up a little bit. Now we're getting some really nice volume starting to push this price higher. Momentum is really moving strongly ahead, so we really are moving into that uptrend phase. So we know we go from the downtrend phase, okay, into an accumulation pattern, which was a big accumulation pattern very nicely, and now we've broken out of that. It's looking very healthy indeed. So we just simply raise our stop there. It may get to R1, which is $6. It may not. We don't care. We just follow with our stop because we've already got a profit in there, and we're going to make sure we don't lose it because we follow it with our stop. Okay, so there's a few stocks for you to have a look at. It's an exciting market. There's a lot of stocks that have pulled back and hit their stops, which we've taken out, taken some good profits this year, which has been great because we've had a really good run in the last couple of years. So things are looking okay. So we're pretty happy with our position at the moment. So with those stocks there, you can take a free trial with complete access to the trading centre, which has all my stocks, all my stops, all my trend intensity ratings for you to have a look at and follow there, so you know exactly what I'm doing. Okay, so now we're going to get into the next phase of our video, which is really trading tactics. Now, I just try and give you a little bit of a tip on what I do and the sort of thing to guide you a little bit, because I know there's a lot of people out there a bit unsure, especially in these sorts of markets. What do you do? Well, you know, you don't doubt, you don't worry, you follow your trade plan. I hope you have one because it will help you and will guide you. If you don't, then you need to get one. So for trading tactics here, the unemotional focus and wisdom of a trade plan always knows best. It knows better than me, knows better than the experts, it knows better than the analysts, it knows better than everybody. Okay, so price is what you follow because price is what you profit from. And you can see here, Commodities had a beautiful break high. It's now hit its stop and broken down, and we're out of that stock. We've taken our profit. What happened next? What happens next really is of no interest to us, apart from a new signal of a new high or a trend reversal. So we're happy with our profit. We take that, we bank that, and we just move on, and that's the way we do it. Okay, so the trade plan has really told us to get out, and we're neutral on there. This has proven time and time again. Despite thinking we can outguess it, it simply doesn't work. We get those feelings, and we oh no, do I want to hang on to this one? Do I want to get out of this one? No, yes, maybe. Don't really do it because it probably won't get it right. You'll probably get it wrong most of the time. So, and this will probably get it right most of the trade plan. So, always be content with the outcome. And that's what you've got to do, and that's how you follow it. Okay, right. This is why we have very few stock picks, as most stocks are going down, apart from some like Evolution, which is up 64% since we entered this late September last year. So, you know, the breadth of the market has been very weak for a long time. You know, a lot of these stocks haven't been performing very well, and I don't know why that is. The index has been going up because 48% of that index is made up by 10 stocks. And so that index really is not very good guide as to what the stock market is doing generally. Generally, the stock market has been fairly weak, apart from those few stocks. So, you know, we just pocket those gains. We trade the stocks that are going up. We don't trade the stocks that are going down because that means we're going to lose money. And that's just simply what we do. We just follow trends, and some will work, some won't. But the ones that work, like Prometheus and all these other ones that are doing really well, like the gold stocks at the moment, they're the ones, that's how we generate our money. And those that that break up and then hit their stops, we get out of them because they're the weak ones and they fail. So who was to know gold stocks were going to take off? Okay, I would have no idea that it was going to be to this extent. I only report the facts as per the trade plan direction. Okay, so that gives me the guide, that tells me what to do. So I'm like the middleman here, imparting the knowledge of the trade plan and giving you that knowledge to try and help you to get into the right spot in the market and navigate these shark-infested waters that are very, very difficult at times. Some of the moves, especially during the reporting season, can be monstrous and they can be killers. And I'll tell you what, we've had a couple of those, but mostly our surprises were on the upside because most upside surprises come from uptrends. So although it will happen sometimes, it's all part of the risk management thing that when you trade the stock market, these things occur. You just have to wear them, get on with it, move on, take your loss, whatever it is, and you'll find that profits will generate if you behave properly and follow your trade plan. So let your trade plan be your guide. That is the trick. Okay, it's really a matter of just being hard-nosed, disciplined, and following what you should do. That is the trick of it. There's no holy grail at the end of the rainbow there, unfortunately. So it's really quite a tricky move. And the stock market, it worries us, it drives our emotions, all these sorts of things which we really can't listen to. And once you've mastered the art of really just looking at the trade plan and just doing what it says, you'll find that things will generate, profits will generate and come along nicely. Not all the time, because stock market doesn't go up all the time, but it goes up most of the time. And so that's why we trade from the long side, and that's why we do okay, and that's why we make money. And if you look at our charts on the homepage, you can see over the last 22, 23 years, we've made good money. You can see like the crash of 2007, 2008 is like a minuscule move in that chart compared to what we've gone upside now. And even the COVID correction, a few years down the track, will look a minuscule move in the market compared to what we're going to see in the upside, which we're seeing now, okay, especially on the profits that we're generating. Okay, so That's really most of what I've got for you today. Really, this sort of times you've really got to stay focused and discipline what you do, and don't wander about just sort of thinking what you can get it right all the time. Okay, so we follow up trends, not knowing where they will take us. But what do we know? We know trends occur all the time, and they often exceed our expectations. Some will, some won't. We weed out the weak and follow the strong. I repeat this over and over because that is how it works. Okay. All right, well, I hope you have a good week this week. Survive it well, listen to your trade plan, do what you're told, and behave well. Okay, so watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week. Thanks very much.